After initiating a broad and widespread investigation, we have now obtained definitive proof that there has been illegal manipulation in our energy markets, and we're in the process of evaluating dozens of other such heinous and egregious acts of reckless and widespread fraud and manipulation.
Just like that perpetrated by the government and the Federal Reserve on a near daily basis. Have we made housing prices the only component of the consumer price index yet? We had better have them get on that.
We have now officially accused Optiver, a Dutch trading company, of making roughly $100 billion.
Oh, no, wait, that's wrong. My apologies.
$1 billion.
Oh, no, wrong again? So sorry.
$1 million in illegal profits by manipulating the prices of crude oil, heating oil, and gasoline over an 11-day period last month.
No? Sorry,
Earlier this year.
Oh, no, not that either. My most sincere apologies.
Well over a year ago.
You gotta love it. Is this the best they could come up with? We've spent trillions more to buy oil, and all their ranting and raving about market manipulation has so far discovered nothing more than a scheme worth $1 million? What a joke.
Oops, oh my, did I say that out loud?
Apparently, this manipulation was achieved by a practice known as banging the close, which is basically buying or selling using a bunch of orders near the close of trading. Isn't that what most day traders do? Day traders rarely use a single order to build a position, and they're often out by the close of trading. If anything, banging the close sounds more like some sort of deviant sexual act.
Bang my clothes, bitch. Oh, wait, no, I'm not that kind of bitch. Oh my, hand pickles.
Unlike many manipulation cases, this one accuses the defendants of actually succeeding in moving market prices. In 19 attempts, they were able to slightly move the markets 24% of the time. In 3 instances, the illegal trading pushed prices of all 3 commodities lower, while the other 2 resulted in higher prices for gasoline and crude oil. Must have been real whopper moves for such sizable positions to yield only $1 million. Lucky these guys didn't get their heads handed to them on a platter by some real market-moving manipulation, like when we tried to scare out all the evil long speculators in the oil market and caused a huge short squeeze higher instead. Oh yeah, and did we figure out yet who created that phony press release that caused Freddie Mac to shoot up a whopping 25% and the Dow over 250 points in less than 10 minutes? Or how about when that respected Deutsche Bank analyst Mike Mayo came out pumping the financials on July 22nd around 2:45 p.m., causing another 250-point jump in the Dow and further squeezing many financial stocks up another 50% or more by next morning?
Makes you wonder if anyone knew that was coming. Oh my, I nearly forgot. We asked him to do that.
Anyway, this has all been fun, but we now have to get back to finding other ways to legally manipulate the markets into doing what we want them to.
Oops, did I say that out loud?
I mean, into doing what's in the best interest of the American people. Like giving boatloads more money to our kind and honest banks, brokers, and mortgage companies just doing our bidding while over-leveraging 50-to-1 in billions of dollars of mortgages that lose more value by the day. Why help homeowners directly when we can take so much more advantage of you by replenishing bank reserves at your expense instead, and letting them make fortunes off of you from the highly leveraged interest rate differential risk-free? Heads we win. Tails
You lose, bitch.
It's awesome. While you were all sleeping this past week, burping up your brew, the U.S. House passed the Foreclosure Prevention Act of 2008, H.R. 3221. Don't like it? Tough. Get a third job. We already rebated a bunch of you pocket change to buy a new iPhone and a tank of gas. Once we ram this through the Senate too, Treasury Secretary Hank Paulson will be given an $800 billion blank check in the form of an increased federal debt ceiling to bail out Fannie Mae and Freddie Mac. Think that's bad? We've even managed to toss in a provision for the IRS to receive notice of all your credit and banking card transactions. You gotta love it. Benito Mussolini and Joseph Stalin must be snickering from their graves. Even though the IRS was previously blocked by the courts from receiving this information, they'll now have complete access to it through this $800 billion housing legislation. Wow, the banks you all up, and in return, taxpayers get screwed with even more huge debt, inflation, and loss of even more of the little privacy you all have left.
Sort of like those people all getting arrested for being uncivilized while the FDIC decides how little to give back to IndyMax depositors.
I'm surprised we didn't manage to include people getting chipped yet. How many other terrific ways can we come up with to help us better protect the hard-working taxpayers at their expense, while leaving them all broke, destitute, and owing what little left they managed to save to the IRS?
If that doesn't get them, we'll just take the rest away through inflation. Gotta keep them coming back to their banks and high-interest credit cards for their credit fix.
Worst case, if something goes wrong again, we'll just legislate the High Interest Credit Card Bailout Prevention Act of 2009. You know, to protect the banks.
Oops, did I say that out loud?
I mean, the hard-working taxpayers from widespread defaults on their usurious credit card loans. Prosecuted for $1 million worth of petty questionable market manipulation, my ass. Just wait till your friendly banks, along with Fannie and Freddie, are done using all this additional newly extended credit to clean up their balance sheets and start actually lending money to people again.
Back to the golf course with my private jet. Soon after will be when the real inflationary fun, fireworks, and festivities begin.
Quick, pass me the pork, bitch.
Gotta buy up all the lube so I can sell it to you all like oil after we're done
banging and banging and banging your clothes.